We're looking at video number 2 of 3 for 921. You're welcome. We'll start with GEV. We're doing alphabetical, of course. GE Vernova, one of the spin-offs from GE. I am short and I am making money. It did come under fire, but it is winning, if not won. So I have several shorts like Boeing scattered throughout the year, different levels. Not one of them is in trouble. One of them expired for maximum gains last week, or is expiring this week. I can't remember. Was expiring this week. I closed it and I sold similar ones out in time. So I repeated the short out in time. What am I saying? I think it's seen a lot of upside and it's consolidating. So once it breaks out of the consolidation, it can shoot to 740. But that's not my forecast right now. So if the market is going to 670, GEV will have the opportunity to tackle this prior fail that it suffered in September. If they take that out, they can shoot to 690. Okay? So if they take out 650, they can target 690. They will need help from the market. And also they do have support. I think there'll be support through a dip into 565. If for whatever reason you lose 565, you're probably going to go to 540. So I gave you both extremes. This is what they call a flag. If we were watching a 5-minute chart and we were trading live, somebody would say, Nick, it's flagging. Going from here, drawing a flag. And if they can break the flag, they go all the way up there as big as the one where they came from. So there's that scenario. Not sure if that's what is there that they're chasing, but that is an opportunity. It's a big stock, and I don't know if this P&L supports such a breakout. But this is a crazy market. They don't need results. Depends on your paid membership. Mine, you can do more than 8 on other ones, I believe. But anyway, I know I'm restricted somehow with my premium membership. GME, speaking of which, there it is, flagging. Flag. Pennant. They call this a pennant. So what is this saying? They failed at 26.6-ish for quite a bit since their last earnings report. They spiked and they're growing their valuation into that spike. You take out the reaction from the earnings, you will probably get to 28.40. Whoa, looking left, 28.40 would be its stretch. I would exit at 28. That's the trading comments. If you're investing in the company, just track their progress on the fundamentals. I don't know much about it. I'm not their target, a gamer. Support 24.50 and 23.50. Nice round numbers. Nothing to say. It's all-time highs. What do you want me to say? All-time highs. I am short and struggling. I'm going to have to defend it. I just need a small dip to win, but that is a pretty monster move from a pretty monster stock. This is one of those weird stocks. It's not bloated because it has fundamentals on its side. It's an amazing company. Look at it. And the last headline that it got matters because they got to keep a few of their platforms that they were in danger of losing. So that literally changes the bottom line. So that wasn't an overblown reaction to the headline. So now it's a matter of it will go with the market. If the market is higher, this one will go higher as well. That's why I need to protect my position. And buying calls will be the easiest way to do it. Buy the dip, okay. I think it needs to dip to 212 for me to be interested in it. At 250, if I'm getting long Google now as an investor, I mean, where was I if I was the one thinking about it? Looking left, there's literally no volume inside of 216. Look left, there's no transactions. There's also no transactions at 243. So areas of weakness, 216, 17, 243, areas of weakness. A good baseline, it definitely in the low 200s for me. Grab. Approaching an exit zone. So pandemic trade. How do you value this? The investors were overzealous at 15. They were overly bearish at 2 or 1, or whatever the hell it was. And here they are at 6 or 640. If 750, 720 zone is pivotal, 10 is as well. I don't know if this was a SPAC or not. $10 seems to be the magical number. Week candles, not many. Maybe at 550, but that's the breakout. So they haven't gone back. Often the stocks want to go back to their breakout zone. For example, this one broke out from 360. They came back and visited the breakout zone to go higher. So what if they repeat the process here and they have a dip of sorts? If I was going long, chasing this breakout, I would wait for a dip. If I missed it, you already missed all of this. So not an obvious point of entry, same comment. What does that have to do with Graham? Oh, Google ripping atoms. So Google doing nuclear experiments in my neighborhood. Great. What can go wrong? They couldn't even get a dog to walk upright. They had to sell the company. What? Goodyear tire. This is pretty strange chart right there. Gapping down and consolidating. Okay, so it lost support in a big way on earnings reaction, and it fell into a solid base. This base, anything below 8 has been consolidated for more than a year. Solid. So if you got long now, okay, you just need to know what is your upside expectation from it. Prior support becomes forward resistance. So as it approaches 950 and 10, you're going to find sellers, and that I would be out above 10. I don't think above 10 is easy without a game-changing headline, and I'm not sure what that would be. If for whatever reason you lose that support, then we can have another conversation, but it's too far. GitLab. Trying to get out of the consolidation baseline that it established. That's pretty good, and it's doing it in a healthy way. You see all these long sticks? That's hesitation. Sellers and buyers, they're negotiating. They're trying to decide, do they want to be at 56 or go back to 46? That's what it seems like. And you do have a big fail at 54 twice. Look left. So this is an open candle up here. And so fail, 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 fail. That's a pretty big zone of consolidation. I think it's stuck. Let's zoom in. Whoa, okay. And look at the reaction to the earnings. You can build a box around that. And you can tell that you have a bunch of buyers below 45, super strong. And one seller at 52 right now, super strong. So 52 is your bogey, your problem and your opportunity. You take that out, you get to 55. HIMS, great business. We bought the dip. It lasted for like 10 minutes, but then they've offered us dips all the time. It's a headline stock. I told you the P&L is fantastic, but I'm afraid. It's the kind of stock that could get a headline that would be terminal or near terminal. Like many of those dips are because of Amazon headlines, which are manipulated. They release these headlines to manipulate the stock market, the stock of HIMS. I almost have proof. I had been getting, so my age group is their original target audience of HIMS. And I would get these emails, health, get this and get that from Amazon. And then one day this stock falls 28% because the announcement was Amazon is entering the business. I had been already getting the emails from Amazon for months. So it was not a secret. They just brought it to the forefront, and everybody freaked out. So heavily manipulated from headlines. Be careful. Most of them are not real. Just follow the money. As long as the P&L is like this, it's a good investment. And buy the dip, yes. Up here, for me, no. It's been sold off hard into 65 and 67. If you take out 70, I guess you can approach 87. So if you bought the dip for that 87 run, go ahead. If you bought 50 shares, get rid of 20 to leave the runners to work for you. And on the next dip, do what we've done. Sell puts to own shares. Look, credit put spread to August to own shares, and that they didn't give us the shares. But it got tested. Hershey's tied to diet drugs for a while. This whole drop was Ozempic. And my reaction was like, I think you got this wrong. Ozempic makes more sales for Hershey's because people that like to eat now can eat more with less effect. That's how we are. We love to eat. I'm included in that bunch. Hershey's 200-ish seems like it could give you a little wind beneath your wings to get to 220 with a lot of sellers at 205, 210. So I think you might be stuck here for a while, but you definitely have a big opportunity if you can break out of that blue box you see on my screen with the WTF. So you're stuck here, and if you break out of the blue box, you could get to 230 plus. Buy the dip. The P&L is solid. Interactive brokers, consolidating, flagging, whatever you want to call it. So a hard seller at 68. You overcome that, you go to 74. But it is shortable with a stop. But the downside target, you have buyers at 60, backup buyers at 56, and backup buyers at 52. So I think if you're a bull, you want them to stay above 62. Then the opportunity to break out from 68 is real. So if you're long for that, okay, I'm good with that. ISRG seemingly not finding a floor, falling into our credit put spread. I had a credit put spread for yesterday, and had I kept it open, I would have won, but I closed it out of caution. This one. So I got out of this. No, it was at 410, 420, 410 or something like that. So I closed it to avoid the drama. It was greenish. And I still have that one. So I have to deal with that one. It is underwater. I can close it now and lose $150 air math. I don't remember exactly. If it's large, I can trim it. Or I can stay in it and hope on rallies I fix it, get out of it on rallies for a small loss. Or as it approaches expiration, I would roll it down and out to a couple times in order to get out with minimal damage. I'm no longer looking to make money out of that credit put spread. I'm looking to exit without much damage. Not sure why it's falling out of control. I don't know why this is here. We'll delete that. It's approaching, all of these green lines are moving averages, so they should provide a support zone. But because the rally was so fierce, this is what can happen to the market. The market is in a fierce rally. Once they decide they no longer like the market, they will drift lower, and we will seemingly not find a floor like we did in 2022. So this one is just starting early. Pivot points, 400. You can see it from right here. Whatever happened here. It wasn't even an earnings report. So that gives you a visual of where the buyers are. So we have reasons to believe that we can get out of this credit put spread with no problems. As an investment, I mean, it's not a bad starting point if I'm not long. Gartner, what do they do? Research advisory company. Yeah, I don't know what that is. Seemingly a good P&L, but fell off a cliff. Is that an earnings report? Yes. Okay, so decide, are you an investor? If you are, then do you know the business? Do you know why they're falling? That's a serious drop. So they don't usually fall that much without really good reason. And support is right here or much lower. So if you lose 220, the support, you're probably looking at 190 to 160. The next level of support. So the question is, what happens on the bounce? If you got long to fill the gap, that's an amateurish way of looking at it, but that's the market that may give you a lot of rewards. So you do have support. If you bought the dip, fine. You might get rewarded well. Just make sure you put stops. Jinko Solar, not an obvious point of entry. It's vulnerable. That arrow. Same comment. Same comment. vulnerable. I wouldn't buy a call, would not buy a call. You could convince me to sell a put spread if you wanted to go long. Buying a call seems, I guess, time frame. So you can buy a call from here to 26. That's $1. If you break out of 27.20, 27.50, you might get to 29. Those are the short-term comments. It has a trend on its side short-term. So you could buy a call, depends on your time frame, I guess. Lazard, is that how I pronounce this? Financial advisory. Okay. Definitely not an obvious point of entry. Vulnerable for a dip towards 50 or 59. That is on the daily chart. Shorter time frame, you could break out of 58 to get to 60. So are you trading or investing? I guess I'm asking. Wow, you guys are stumping me with these stickers. I know I've seen the sticker before, I just don't remember. Another distributor, vehicle products. Wholesale. Okay, so car parts, is that what this is? They lost 36, and that's a big loss. And 35 and 34 are resistance. And now you're hoping that this is support. So I need to zoom out to see if we have other supports. We do. And so we have the pandemic support zone below, kind of like LULU. Can't really tell where the real support is, but I can bet you that around 28 through 25 is like a really strong baseline. So if somebody bought the dip with that in mind, that's fine. You do have a drift higher to recover opportunity if you have patience, and if you lose 29, you might get the mid-20s. But it shouldn't be a disaster starting point. Lemonade. So the stock to the moon and the P&L not on a quarterly basis. So we've had a year and 1 year and 1 quarter with flat top. So it's not a bad thing. It's just not an obvious entry point. Like, what is the valuation of this stock? I'm curious statistically. 9 times sales, not crazy. Overview. What? Okay, so they sell this much. Just their gross margins. Like if these were burgers that they're selling, to bring the burger to the plate when you're buying it, they lose money. So they have no chance of making money with this model. They need to do something else. I thought this was an AI insurance company. Am I wrong? It is. How the hell do you have gross margin when you're not selling a physical product that is bigger than your sales? And I need a lesson. I'm asking honestly. I'm asking. Like a company that sells a service, who can I think of? ARM, okay? ARM sells ideas or rents ideas. So they don't have a thing. Their gross margin is like this. APP, Apple, I think. I'm going from memory. That's the gross margin I would expect from Lemonade. Whoa. Okay, maybe the insurance business is different. Yeah, I would not invest in it up here. If you're chasing the breakout for a trade because it's going to 74, that's fine. And what is it? Tell me. Cost of sales. What do they include? The breakout may have happened at 58 and they may be charging towards 66. Buy the dip if you want to go there. That's my take. This week, if it has a couple of red days and you buy it on a dip for this opportunity for a trade, that's fine. LULU, it looks like it's recovering. So I told people that it's inside a solid support zone, but unfortunately the zone is old, 2020, and wide. Like it extends way lower. I do have a credit put spread in there. We need some luck to get out of it with no damage. This is the one where I would take shares and sell them to get out of my credit put spread rather than to take a loss on my credit put spread. If you need help with this one, come into the live room and I can explain to you the process. If you're buying these shares as an investment, I don't hate it. I don't love it though, because what if the market has a hiccup? So we can see it had green ticks when the markets was going south. Well, when we had a couple of red ticks this week, this was green. So it's already lost a lot of froth. McDonald's, I was short and then I wasn't anymore. I believe I shorted. I shared with you a credit call spread right there with an optional credit put spread right here, or vice versa. So if you took the Iron Condor, you're probably still making money. The reward is more than 25% if we win. If it stays inside these two green boxes for the middle of October, that's how you win. If you have partial gains and you're worried about it, close it. We can reopen it. Earnings in 32 days. If anybody knows any of the questions I'm asking, like I don't know what they're doing this or that on, like for example, the insurance company, let me know, educate me, that'd be great. Monster. A baseline of buyers into 62.50, 62 and 61.50. So anything approaching 61 should be like bulletproof support. And anything approaching 66 or higher, like hard sellers, that's what happened once before on earnings and this push as well. So if you're a momentum trader and you're buying dips, this is where you should start buying the dip. Maybe a credit put spread, and then add some calls when it stabilizes to catch the rally back up there. That's a trade. Investment, all-time highs, I'm not loving it. It's good. I mean, it mirrors the market, but here or a little bit higher, there's a dip. I would wait for a bigger dip from an investment perspective. Merck, from an investment perspective, you're inside of a baseline that's proven. A lot of volume, look left, for years and years and years, even pre-pandemic. So if somebody went long down in this area from an investment perspective, I don't blame them. They did well. Consolidation, and they're trying to avoid this pink path that I had established before. And mind you, I drew it from up here. So they consolidate and then they lose the consolidation. So that's what they're trying to avoid. And they're making headway. We have higher lows. Maybe if you squint, we have higher highs as well. But then we went back into the area of consolidation. So somewhere around here, they're still trying to consolidate. And this one was filled. But you can see how they're having a hard time holding 85 plus. So maybe they're stuck here for a while. Earnings in 39 days. Whoops, we skipped one. MRVL, probably getting some tailwinds from China. A lot of its business is from China. So not an obvious entry point because it has that tailwind and it's going into a prior selling zone. 78 to 85 has not been a good entry point. 1, 2, 3, 4, and this is the 5th attempt. Buy the next dip. So the opportunity technically here, if you break out of 85, you go to 100. If you lose 60, you go to 47, 48. Those are two really big deals. Like not easy. Until then, you're stuck inside of those ranges or even tighter. Think about it that way. Micron. Two of you came to me this week. They wanted to short Micron. I said, be careful. It's going into an all-time high situation, but it is shortable because of expectations. So kudos, you made it. The breakout happened. I'm going to delete that. Areas of interest to see where I would close my short. Inside this, there should be buyers, and there's reasons to come down here. That's the only obvious spot from candles. Levels, 132. Okay. I was short. I have not reshorted. I'm avoiding single stock headlines because these days, we've seen so many situations where the White House comes out. U.S. representatives visit China and they come back with a deal for a company. So you don't want to be stuck short or long a stock that gets a bad or a good headline from rhetoric. Single stock headline risk is what I'm trying to avoid if I can. So, but it is shortable. It's not an obvious point of entry. Nike, so I didn't convince a lot of people to go long for Nike as an investment when it fell into hell, and now everybody wants it. That just is proof as to how we people are sheep by nature. We love to follow. It's not a bad thing. It's who we are. Support zone, I think 66 or lower would make me more comfortable because it does go back and forth. Amazing company, one of the best marketing companies of all time. They take controversies and they turn it into sales. So they have competition from a lot of high-profile names these days, like On. But in the end, I think it will crush all the competition. I remember like a decade of competition with the Under Armour. I haven't gotten a question about Under Armour stock in years. So they buried that competition behind. Same with Adidas, etc. It's just a winner. Own stock as an investment, yes. Here, not an obvious entry point. I mean, it's not a bad point, but decide, are you trading? If you are, then you might accelerate towards 66. I would exit my shorts into the middle of the red box. OKLO, the opposite conversation here. So I would not touch this stock if I'm a trader because there's no sales. And a lot of people are trying, is it time to short OKLO? Hell no. What do you mean, Nick? It's going to the moon. Yes. What am I shorting? What concept am I shorting? Sales? They don't have any. You're shorting hope. I don't do that. Let me zoom out. This is an all-time high. I don't even have a level to short. So this one is gone. Whatever it does, nuclear energy, what is it? Yep, clean energy. This is a concept, and it's going to take years probably to come to fruition or not. This quantum computing is starting to smell like pot stocks in 2017. I mean, we need energy, that's a fact, but we'll see how this energy, nuclear energy, plays out. If you did your homework and you know exactly what is coming down the pipe with as far as sales, I know what I told people this last week. I said, do your homework on the proposed sales. Like, they must have a forecast at some point. Somebody must have written an article on it saying, oh, I think they're going to make X dollars. Take that number and see how much, if you can come into a price to sales, fictitious price to sales, or a proposed price to sales, and then decide if it's 1,000, then short it. But you better have a good stomach. For me, it's nothing I would ever consider for myself. But you need to do homework on the company. Path, very volatile stock. It's going into a prior fail. I would think if I was long as a trade, I would exit between here and 1250. I wouldn't short it. I think it dips. If it dips, it's to 1140. So you're stuck on a trade basis. So PGRE, Paramount Group. They bought somebody some recently, right? Or did somebody buy them? If it's that headline stock, then you need to play arbitrage. So you need to go find out what the deal is and see who bought what for who, for how much, and see regulatory if they're going to let it fly or not, and if they're going to renegotiate the price or not. Technically, this chart is, if it loses 6, it goes to 5. I remember saying Paramount might be a good buy before they changed the ticker. Wasn't it PARA? Back on the left side. But up here is, I believe there's a headline buyout of sorts. So do your homework on that. The chart tells you sellers at 7.3 or higher, buyers into 6 and 580. That's the end of the second video.